Hello, everybody. Welcome to Monday. The S&P 500 was up almost 1% today, and kind of exactly the opposite type of day as Friday, because Friday we had the conflict that started with Iran and Israel. Market dropped 1.1%. We made most of that back today, really based on the same news. There was some easing of the conflict, some reports coming out of Tehran that they might want to even restart their nuclear proliferation talks again too, which is something that I know the president was hoping for. So, the market responded immediately at the open and kind of stayed up there all day based on that. What's happened right now with a lot of these, quote unquote regional conflicts, at least for the stock market, becoming buying opportunities. I mean, Ukraine is still going on and nobody's talking about it anymore. But when it first started, the market did drop quite a bit. Oil went up quite a bit also. So there's a lot of fear that that might have some impact, economically. And oil's dropped back down. And matter of fact, oil came back down today after going up, about 7% on Friday because of this conflict. So, it's one of those things where obviously things could get worse and could spread farther. So there was some feeling today like that might not happen. So hopefully that continues. I think the bigger thing really is that the Federal Reserve is meeting this week. They meet on Tuesdays and Wednesdays. Uh, and so on Wednesday they'll come out and say, what they were going to do. The expectation is they're not going to do anything, not going to change rates as far as that goes. That's a pretty strong expectation. So I would be very surprised if anything happens. However, every quarter they put out what's called the dot plot, and this is a guess by each board member as to where they think interest rates will be, by the end of this year, by the end of next year, et cetera. So the last dot plot that came out, there was an expectation for 2 rate cuts for the year. The market is still factoring those in right now. First one starting in September. And so we'll see what happens with this particular dot plot. I think that's what, we'll be watching for the most. Still going to be a little difficult for the Federal Reserve to even guess as to what's going to happen because we haven't seen, the inventories that was built up get depreciated out or pushed out to the point where we're starting to see the tariffs hit those prices of new goods that are coming in and what type of impact that has and how much of the supply chain is absorbing the tariffs, how much of the end product consumer is absorbing those tariffs, and even what the tariffs are. Obviously, that's still in flux as we speak. But that'll be the big news for this week, in my opinion, as far as that goes. And luckily, I'll actually be here until Wednesday. I am leaving on Thursday, Friday, and I won't be here for next Monday either. So, but I will report on what happened with the dot plot and what the Federal Reserve said as far as that goes. Market's still hanging in there. We're still in that kind of 6,000 range on the S&P 500. Still, hopefully going to break into a new all-time high. I do think it's fairly important that we do. So we'll see what happens as far as that goes. But anyway, look forward to seeing you tomorrow. Thank you very much.